Will the Kansas City market collapse in 2025? All right, let's just cut to the chase. You've been sitting on the sidelines waiting for the perfect moment to buy or sell a home in Kansas City. Am I right? Maybe you're thinking, what if the market collapses? Should I wait? What if I make the wrong move? Let me hit you with some cold, hard truth. Waiting around because of the fear is the fastest way to miss absolute big opportunities. But I get it. There's a ton of uncertainty out there, and you don't want to make a bad call. That's why I'm here to help you get crystal clear on what's happening in the Kansas City real estate market for 2025 so you can move forward with confidence. I will say, you're not alone in this. Tons of people I talk to are in the exact same boat as you, unsure of what to do because they're waiting to see what 2025 brings. But let me tell you something. The market isn't some game where you guess the exact right moment to jump in. It's about strategy, timing based on your personal goals, and understanding the data. I'm in the trenches every single day here in Kansas City, analyzing the numbers, watching trends, and helping people navigate these decisions. I've got your back with the insight you need, not just the headlines. In this video, this is what we're going to be breaking down. What's happening with home prices? Are they going up, down, or sideways? What to expect with interest rates? Are we going to see relief, or is it going to be more of the same BS? And then the absolute wild cards, those hidden factors that could surprise you into the mix, and what they could mean for you. So let's dive on in. Prediction number 1. Will prices go up, down, or just stay flat? Here's the question everyone wants answered. Will Kansas City home prices drop in 2025? How's the market, Big Mike? My short answer, no, not even a little bit. In fact, I think we're actually more likely to see modest price growth, somewhere in the 3 to 5% range, and here's why. Kansas City's unique position in the market, Kansas City isn't like some overheated coastal market you hear about in the news. Miami, San Francisco, New York. They've seen massive price surges and corrections because their prices were driven by speculation and unsustainable demand. Kansas City's growth, on the other hand, has been slow and steady, fueled by real demand from families, professionals, and investors. Even during economic shifts, our market has historically been stable because we're not overpriced compared to national averages. We have a massive supply versus demand imbalance. Here's the deal. Even with the higher interest rates slowing down some buyers, we're still dealing with a lack of inventory. Builders aren't producing enough homes to meet demand, and existing homeowners are holding onto their properties because they locked in low interest rates. This supply crunch is putting a floor under home prices. In hot areas like Liberty, Parkville, Kearney, where demand is especially strong, prices are even climbing faster. And then this affordability versus national trends, Kansas City remains an absolute magnet for relocating from high-cost areas. People coming from places like California or Chicago see our housing prices and think they've hit the absolute jackpot. This influx of buyers continue to support demand and puts upward pressure of prices. If you're waiting for a crash, you might be waiting forever. Instead, focus on just getting into the market now so you can benefit from the appreciation down the road, and before all the infrastructure hits, you're going to make a lot of money at that point. Prediction number 2 on this list, interest rates. What's the Fed's going to do? Well, interest rates have been a thorn in everyone's side. I get it. Nobody wants to pay the bank any bit more, but let's be honest. They've scared a lot of people out of the market. So what's next for 2025? Well, I don't have a direct line to Jerome Powell. Here's what we can reasonably expect. Rates are likely to stay flat or drop even slightly. The Federal Reserve has been aggressive with rate hikes over the last 2 years to combat inflation. While inflation is cooling off, the Fed is likely to hold rates steady for most of 2025 to avoid reigniting the problem. We could see a slight drop toward the second half of the year, but don't expect rates to suddenly fall back to the 3% mark. If you're waiting for those days to return, you're living in fantasy world, and please don't reach out. Now, how rates impact affordability? Here's what you need to know. Every 1% change in interest rates have massive impact on what you can afford. Even if rates drop 0.5%, that'll likely bring in a flood of buyers back into the market, increasing competition and driving up prices even more than what we've seen. If rates stay where they are, you still have options. Sellers are offering rate buydowns, and VA or FHA assumable loans are great tools to make higher rates even more manageable. Why rates are only the beginning factor. Too many people fixate on interest rates without looking at the bigger picture. Sure, A lower rate is nice, but what really matters is your monthly payment and how it fits into your long-term goals. If you're waiting on rates, you're gambling with your buying power. Don't let fear over a few percentage points stop you from building wealth. And if you say, hey, Mike, I just don't want to pay that high interest rate. Look, for the first 15 years of your mortgage, you're mainly paying interest rates only. You only really experience your true interest rate on the back half. This is where banks make all their money. Most of your mortgage payment goes to interest rate up in the front part. Prediction number 3, the wild cards no one's talking about. Beyond prices and rates, there are a few factors that could reshape the Kansas City real estate market in 2025. And let me break them down for you. The economic growth in Kansas City is booming. We got Panasonic's multi-billion-dollar EV battery plant bringing thousands of jobs to the area. Big employers like Oracle and Garmin continue just to grow and grow. And let's not forget the ongoing development at the airport. More jobs means more people moving here, and that's going to fuel only more demand for housing. Migration trends, people are still fleeing high-cost markets for affordable cities like Kansas City. This migration isn't slowing down. Kansas City offers a rare combination of affordability, quality of life, and job opportunities. These relocators bring cash from selling their higher-priced homes elsewhere, which puts them in a strong position to buy here. That's another reason why our market remains so resilient. Now, the Northland expansion and infrastructure projects, the Northland is exploding with new developments, from residential neighborhoods to commercial hubs. Areas like Smithville and Platte City are becoming attractive for first-time homebuyers, and families looking for just a little bit more space. Infrastructure improvements like highway expansions and making these areas even more accessible. All of this adds long-term value to properties in these regions. Now, some of the potential risks, it's not all sunshine and rainbows. Overbuilding in certain areas or economic slowdowns could cause localized dips in prices, but overall, Kansas City's diverse economy and strong demand should keep us on solid ground. So here's where you come in. Are you thinking about buying or selling in 2025? Don't wait until the market leaves you behind. Drop a comment below and let me know your biggest question about the Kansas City market. I'll personally help you out. If you're ready to make a move, whether you're buying, selling, or just exploring other options, reach out to me. All my information is right here. This is bigmikesellskc. You can find me on Google. You can find me on Instagram. The sooner you have a plan, the better position you'll be able to win. Remember, the market rewards action takers, not fence sitters. So let's make 2025 your year to crush it, and reach out to me today. I'd love to have a chat, but for now, Big Mike out.